March 24, 2026, Indian markets staged a remarkable comeback. The BSE Sensex soared by 1,372 points, closing at 74,068, while the Nifty 50 jumped 400 points to settle at 22,912, marking a 1.78% gain. Both indices managed to hold onto their early gains and finished the day near their highs, signaling renewed investor confidence after a sharp sell-off just a day earlier. This rally added a staggering rupee 8 lakh crore to the BSE's market capitalization, recovering more than half of Monday's losses. The day's performance set the tone for optimism, but what exactly fueled the surge? Let's dive into the key drivers behind this dramatic turnaround. One of the biggest catalysts for the market's rebound was a geopolitical development. US President Trump decided to postpone strikes on Iran's energy infrastructure for 5 days. This move significantly reduced fears of a wider conflict in West Asia, which had been weighing heavily on global markets. The news brought a sense of relief to investors, who had been bracing for potential disruptions in oil supply and broader instability. With the immediate threat of escalation off the table, market sentiment improved, paving the way for a strong rally in Indian equities. Another major factor was the sharp drop in Brent crude prices. Intraday, Brent crude fell over 10%, dipping below the crucial $100 mark before rebounding slightly. For India, a country that imports most of its oil, falling crude prices are a boon. Lower oil prices help reduce inflationary pressures, improve corporate margins, and boost overall economic sentiment. This sudden drop in oil prices gave Indian markets a much-needed lift, especially for sectors like auto, paints, and oil marketing companies, which are directly impacted by energy costs. Rally was further amplified by short covering. After a gap-up opening, traders who had bet against the market scrambled to cover their positions, adding momentum to the upward move. This technical factor often accelerates rallies as it forces more buying into the market. Alongside this, domestic institutional investors were net buyers, with purchases totaling 12,034 crore on the preceding Monday. Their confidence in the market's prospects helped sustain the positive momentum throughout the session. Market experts also played a role in shaping sentiment. Emkay Global, a leading brokerage, predicted a 5% rebound in the Nifty, which encouraged investors to look for buying opportunities. Positive forecasts from respected analysts can often act as a self-fulfilling prophecy, as they inspire confidence and prompt action from both retail and institutional participants. This optimism was reflected in the robust market breadth and strong participation across the board. Rally wasn't limited to just a handful of stocks. The NSE advanced decline ratio stood at an impressive 3:1, indicating that for every stock that declined, 3 advanced. Over 2,850 shares moved higher on the BSE, showing widespread buying interest. The Nifty Midcap 100 rose 2.6%, and the Small-Cap 100 gained 2.63%, highlighting strong participation from mid and small-cap segment. GOCL Corporation in particular saw a volume spike 68 times its 2-week average, underscoring the surge in trading activity. Retail investors played a significant role in the rally, acting as net buyers in 5 sessions during March. Their growing participation reflects increasing confidence in the market's prospects, even as foreign institutional investors, FIIs, have been net sellers, offloading Rupee 147 lakh crore in 2026. In contrast, domestic institutional investors, DIIs, have stepped up, buying Rupee 211 lakh crore, helping to offset the FII outflows and support the market's upward trajectory. All 16 sectoral indices ended the day in the green, a rare and bullish sign. Nifty Media led the pack, rising over 2.5%. Nifty Private Bank and Nifty Auto each advanced more than 2%, while Nifty Capital Market signaled renewed interest in financial stocks. Even sectors like pharma and FMCG, which saw more modest gains, contributed to the broad-based rally. ITC, however, hit a 52-week low, showing that not all stocks participated equally. While most sectors rallied, pharma and FMCG showed mixed performance. Nifty Pharma rose just 0.2%, weighed down by declines in Sun Pharma and Cipla. Nifty FMCG gained less than 1%, with ITC slipping to a fresh 52-week low. These sectors, often considered defensive, lagged behind the broader market, reflecting sector-specific challenges and stock-specific developments that tempered gains. Among individual stocks, Larsen & Toubro stood out with a nearly 5% surge, marking its best rally since October 2024. The company's strong performance was a key contributor to the day's overall market gains. Such moves in heavyweight stocks often have an outsized impact on the indices, amplifying the positive sentiment and encouraging further buying across the board. Turglobe Aviation, the parent of Indigo, jumped 5% as falling jet fuel prices improved the outlook for airlines. Asian Paints also gained 4% after announcing a 6.8% price hike, which is expected to support margins. These moves highlight how sector-specific news and commodity price shifts can drive sharp rallies in individual stocks, contributing to the broader market strength. HDFC Bank snapped a 4-day losing streak, rising 3%, while Bajaj Finance rallied 5% after Motilal Oswal retained its buy rating. These gains in major banking and finance stocks provided crucial support to the indices. Positive analyst calls and improved sentiment in the sector helped attract fresh buying, reinforcing the market's upward momentum. Not all stocks joined the rally. Coal India fell 2% after Nuvama maintained a reduce rating, and Power Grid ended lower despite increased capital expenditure guidance. These declines show that even on strong market days, stock-specific factors can lead to underperformance, reminding investors to stay selective in their approach. Earnings forecasts and target revisions also influence market sentiment. Goldman Sachs cut India's 2026 GDP forecast to 5.9% from 6.5%, while Nomura lowered its Nifty December 2026 target to 24,900 from 29,300. However, Nomura upgraded Kotak Mahindra Bank to buy, and CLSA raised Titan's target, forecasting strong sales growth. These mixed signals kept investors alert, balancing optimism with caution. Commodities saw significant moves. Brent crude's sharp fall and subsequent rebound to $102 for per barrel boosted sectors like auto, paints, and oil marketing. Meanwhile, gold prices fell for the 10th straight session, trading at Rupee 135,640 per 10 grams, and silver dropped about 33% in March, entering bear market territory. These shifts in commodity prices had ripple effects across various sectors and investor strategies. Macro indicators provided additional context. The HSBC manufacturing PMI fell to a 54-month low of 53.8, signaling a slowdown in manufacturing activity. Such data points are closely watched by investors, as they offer insights into the broader economic environment and can influence market expectations for growth and corporate earnings. Rupee strengthened by 34 paisa, opening at 93.63 and closing at 93.87. Meanwhile, the 10-year bond yield touched a one-year high of 6.84%, and the one-year OIS rose 50 basis points since the war began, reaching 5.99%. System liquidity moved into deficit, totaling Rupee 65,396 crore on March 22. These moves in currency and rates reflect the interplay between global events, domestic policy, and investor sentiment. Despite the strong rally, the Nifty formed a small-bodied candle with shadows signaling indecision among traders. The index failed to sustain above the 23,000 resistance zone, highlighting ongoing caution. Immediate support is seen at 22,700, with a critical demand zone between 22,500 and 22,600. The market's tone remains one of relief, but caution persists, especially given geopolitical uncertainty. Nifty closed at 52,606, up 2.27%, with resistance at 53,000. The banking index's strong showing was a key driver of the overall market rally. However, for the uptrend to continue, follow-through buying will be crucial. If the index fails to clear 23,320, there's a risk of forming a lower top, which could signal a pause or reversal in the current momentum. While the day's rally brought relief, risks remain, especially around the Strait of Hormuz, a critical oil transit route. Any escalation in this region could quickly reverse the positive sentiment. Investors remain watchful, balancing optimism from the rebound with caution about potential geopolitical flare-ups and their impact on markets. Stocks delivered standout performances. NOCIL soared 12%, extending its three-day rally to 28%. BLS International surged 15% on strong small-cap buying. These sharp moves highlight the opportunities that can emerge in specific stocks during periods of heightened market activity, especially in the mid- and small-cap segments. GMR Airports jumped 5% on hopes of normalized operations in West Asia, while Suzlon Energy gained 2% after securing a sixth repeat order from GAIL. These moves show how company-specific news and sectoral developments can drive significant gains, even amid broader market volatility. IBM Auto and Ultra Greentech rallied 7-10% on plans for eBus deployment, while SEPC added 7% after approving a 1,530 crore acquisition. These stories underscore the growing interest in green mobility and strategic acquisitions, both of which are seen as key growth drivers for the future. Kalpataru Projects rose 5% after winning Rupee 439 crore in new orders, while IRFC gained 4% after signing a massive 12,842 crore loan agreement. Jayati Labs also stood out, rising 5.7% for its sharpest gain in 11 months. These moves highlight the importance of order wins and strategic deals in driving stock performance. Not all the action was positive. Fino Payments Bank plunged 19% to an all-time low, while ITC slipped to a fresh 52-week low of Rupee 290.50. These declines serve as a reminder that even in a strong market, individual stocks can face significant headwinds due to company-specific challenges or broader sectoral pressures. Lind India delivered its best performance in 14 months, gaining 10%. Such sharp rallies often follow positive news, earnings beats, or strategic developments and can attract momentum traders looking for the next big winner. IPO activity remained in focus. Manipal Health Enterprises filed for an 8,000 crore IPO, signaling continued interest in the healthcare sector. Meanwhile, CMPDI's IPO saw tepid subscription at 60% on day 3, reflecting selective investor appetite. These developments highlight the dynamic nature of India's primary market. GSB Crop Science made its market debut, listing at a modest 2.54% premium. While not a blockbuster listing, it reflects ongoing interest in the agri-chemical space and the cautious optimism of investors in new offerings. In the consumer tech space, Swiggy hiked its platform fee to 17.58, following a similar move by Zomato earlier. These fee increases reflect the ongoing efforts by food delivery platforms to improve profitability amid rising costs and competitive pressures. CBI, India's market regulator, approved phased entry of foreign portfolio investors, FPIs, into commodity derivatives and eased exit norms for alternative investment funds. These regulatory changes are aimed at deepening market participation and improving liquidity, making Indian markets more attractive to global investors. Prime Minister Modi stated that the government is sourcing oil and gas from all possible sources. This proactive approach aims to ensure energy security for India, especially amid global uncertainties and volatile oil prices. Such strategies are crucial for maintaining economic stability and supporting growth. Indian markets weren't alone in their optimism. U.S. markets rallied on Monday with the Dow Jones up 631 points. Asian markets also advanced, with Japan's Nikkei rising 1.4% and South Korea's Kospi up 2.1%. European shares edged higher, though gains were capped by lingering uncertainty. This global rally provided a supportive backdrop for Indian equities. The breadth of the rally was impressive, with over 2,850 stocks advancing on the BSE. This widespread participation is often seen as a sign of underlying market strength, as it indicates that gains are not limited to a few large-cap names but are spread across the broader market. Mid-cap and small-cap indices outperformed the broader market, with the Nifty Mid-Cap 100 rising 2.6% and the Small-Cap 100 gaining 2.63%. These segments often attract higher risk and reward, and their outperformance signals growing investor appetite for opportunities beyond the blue chips. GOCL Corporation saw its trading volume spike 68 times its 2-week average, reflecting intense interest from traders and investors. Such volume surges often precede significant price moves and can signal changing sentiment or new developments in a stock. While retail investors were net buyers, foreign institutional investors (FIIs) continued to sell with outflows totaling Rupee 147 lakh crore in 2026. Domestic institutional investors (DIIs), however, bought Rupee 211 lakh crore, helping to stabilize the market. This tug-of-war between retail, domestic, and foreign flows is a key dynamic shaping market trends. Nifty Media was the top sectoral gainer, rising over 2.5%. This sector's outperformance was driven by renewed investor interest and positive news flow, highlighting the potential for sharp moves in sectors that had previously lagged. Nifty Private Bank and Nifty Auto each advanced more than 2%, reflecting strong buying in these sectors. Renewed optimism about economic growth and lower oil prices supported auto stocks, while private banks benefited from improved sentiment and analyst upgrades. Nifty Capital Markets signaled renewed interest in financial stocks as investors rotated into sectors expected to benefit from a market rebound. This shift reflects changing risk appetites and the search for value in beaten-down segments. ITC, a major FMCG player, slipped to a fresh 52-week low of Rupee 290.50, highlighting ongoing challenges in the sector. Despite the broader market rally, some stocks remain under pressure due to company-specific issues or sectoral headwinds. Brokerages made several key calls. Nomura upgraded Kotak Mahindra Bank to buy with a 445 target, while JP Morgan cut IT stock targets, citing revenue guidance as a concern. CLSA raised Titan's target, forecasting 43% sales growth. These analyst actions can have a significant impact on stock prices and investor sentiment. Gold prices fell for the 10th straight session, trading at Rupee 135,640 per 10 grams, while silver dropped about 33% in March, entering bear market territory. These declines reflect changing investor preferences and the impact of global macroeconomic factors on precious metals. 10-year bond yield touched a one-year high of 6.84%, while system liquidity moved into deficit, totaling Rupee 65,396 crore. Rising yields and tight liquidity conditions can influence borrowing costs and market sentiment, making these metrics important for investors to watch. Looking ahead, the market's outlook remains one of cautious optimism. While the relief rally has restored confidence, sustainability will depend on follow-through buying and the resolution of key risks, especially geopolitical tensions and macroeconomic headwinds. Investors are advised to stay vigilant and focus on quality stocks with strong fundamentals. In summary, March 24, 2026 was a day of strong recovery for Indian markets, driven by easing geopolitical tensions, falling oil prices, and robust domestic participation. While risks remain, the breadth and depth of the rally offer reasons for optimism. As always, staying informed and adaptable will be key to navigating the evolving market landscape.